Good afternoon and welcome to the end of day review for today. And today is August the 6th, 2024, and it's Tuesday, the second trading of this week. And we see the market try to recover from a sell-off on Thursday and Friday, and a little bit on Monday. I mean, huge on Monday, but it recovered like half on Monday and now recover on Tuesday. So the setup right now is bullish from the pattern that we are seeing right now. So let's see what really rattled the markets for the last four, 3 or 4 trading session or trading day. Look at this. I mean, it first is new to us. Also, we haven't heard of that. It's the first time we hear of also carry trade. So basically, it related to the Japanese currencies. So basically, in Japan, they keep the interest rates at zero. So basically, the investor or trader or financial spectacular, they borrow the yen in order to buy other assets. And when the Japanese government raised the interest rate, then they then the yen is no longer cheap. And also, right after the Fed had a meeting last week on the week before last week, right? So we are right here last week on 29, it gives us right here on 30 last week. So we are still second week after the Fed's meeting. So basically, the Fed gonna cut the rate, and the yen is also the yen do the opposite. The rate interest rates and the current rates. That means the huge huge carry trade that they have to unwind right there. Basically, they use the yen to buy the US, and now they have to do the opposite, which is sell the yen and buy the US. Obviously, is buy the yen and sell the US, and it takes time for them to unwind all of that. So some people say that it's just half of the unwind. So basically, we don't see the bottom yet. We still can see the second half of the sell-off, but the problem is when it's gonna be the second half. So let's see. I mean, on the daily time frame, we can see that they have a setup for Thursday, a long setup for Thursday. Definitely, it's a long setup for Thursday, or maybe Friday. So basically, they're here talking about the carry trade. I mean, it's just a global, right? Lots of people do this. It's a global. I mean, or big bank or big hedge fund, they do this to make money. And one of the phenomena we see that the big bank, they keep buying, right? They keep buying, and then as soon as the Fed give a signal they're gonna cut, they're gonna sell. That's how they make money, and now we can see that how that's the big picture right there. Even though we are day trade, but our understanding about the big picture can help us a lot to see what direction the market can move, and help us to catch the move right there. So what happened that last week and this week really helped us to understand the macro economics picture right there. So basically, we can see that when the Fed stop raising the interest rate, then the people are gonna go in and buy, right? Buy until the Fed signal that the Fed gonna cut the rate, then they sell. If the new buyer coming, then it will keep the price up. Otherwise, it will fall because people want to take the profits. Look at the daily chart right here. You see that right, the Fed right here. It keep going up right here, right? We remember October 2022, 23 actually. Yeah, the markets recovered 23. Let's see. Right here we have so 1 year. Okay, 1 day, 1 year. Let's do this to 5 year. Let's edit this to 5 years to see. So basically 1 day, 5 year. So yeah, so the market's bottom right here. See the bottom around October 2022 right there. So 2 year. So far we see that the market's run for 2 year. And we see the huge around December, and then boom up rally, and then pull back on March 2023, and then from there it run huge, and then it show up a little bit on October 2023, right? March 23, and then October, and then it rallied from there. From October last year, it's a huge rally. So the Fed is stop raising interest rate. Yeah, from the moment it stop raise interest rates, people going and buy them. So basically the Fed start raise the interest rates right here. This start in March 2020, but in October, which is about 7 months, or when the market show up 7 months, it start already bottom them. So the bear market doesn't last long at all. If we look at the chart right here, we see it already start show off start on March when they start raising, right? But the sell-off already started a year before that. Actually, yeah, the beginning of 2022 right there. And then it's bow back a little bit before the FOMC meeting on March, and then from there the rate of increase is coming down until October is bottom right there. Not yet. I think all the way bottom right here on October. Yes, this is a signal of. You see right there. You see that. Break reverse and do one more time right here. it break, reverse, and then boom. So you can see this is a full breakout right there, the reversal model right there. It do twice, you see that? Test, break, reverse, and this one is yeah, this one also break and retest, then reverse. Oh, if we say right here, this, so you can see that level right here is break, reverse, and then break. It's going to be second leg up right there model. But anyway, the idea that they buy up from October 20, the markets continue to rally right there. Yeah, so we see that the bigger picture that as soon as the Fed stop right into raise, the market will continue to rally. So they stop in July, right? July. But October of 22 is already bottom. And let's see, July, they say July, bottom October, and then 2023 March, we see that is sell off a little bit right there, but then it continued rally. Let's see, July, yeah, right here around July, yeah, July 23, July, yeah, so where they stop raising interest rates. It rally and then it pull back. So it's July right here, pull back around August, and then 23 around October again is start rally, and from last October to this, July is huge run right there. So it's about 10 months right there, rally right there. And the first day of August, we start see a sell-off. Is that right? 17. Why this one 17? It's the daily. Yeah, August 1st. But the sell-off already start, middle of July, I think, after the non-farm payroll, right, or the CPI number, right there. It starts out, and this is the second leg now. Let's see, this is the second leg now, finished right here. But like we said before, we see a break, retest, and reverse. That's the reversal model that we are been trading right there. Yeah, let's take a look. The model we have. So that's curve. Yeah, here's one of the playbook that we built right here. That's it level. See, break it. All right, retest from above, and then we're gonna reverse. So we have this level, key level right there on our line. See that level? It do the same thing last time. It break it, retest, and then it reverse. it gives us 1 2 entry right there, and now you see it's break it, and let's see, gonna reverse this time, break, reject from below. Let's see, it's gonna reverse this time, but we see the huge sell side liquidity sweep right there. It swept very deep into this. Wow, see that in this level, yeah, into this level in April this year. And if we look at the 20-day moving average, which is a deep, it's kind of oversold right there. So let's see, this is, we believe that it's gonna bounce right there, because that's the setup, break, and then retest or test from below, boom. Yep. Let's see, we have other similar setup. Yeah, right here we have another setup right there. So basically you have break it, and then it's retest from below, and then boom, you're gonna reverse. The trick, the interesting is we see that for this you don't have much long wick, right, which is the sell liquidity sweep right there. But for our currently we have a huge long wick, so that means it retests from above also. So we can see the level that it retests from above, which is this level right there. Right there, this level also key. Yep. So pay attention to the level of 52.73.50. We see kind of how the market gonna play out for tomorrow, or it's gonna start very soon, right? 18, about 10 more minutes, it will start. See how we're gonna react to this level. This is the key level we're gonna watch for this week and next week. All right, for today, price action. First we look at the London, and we see that the model that ICT gives to us is worked well for today, which is the London rate right there. So in this case, it's a short setup, so it takes the buy sell liquidity. But for today, for our case, our scenario is a sell side liquidity. So basically, it takes out the sell side from the London. That's a little bit different right there. But also another different is that it rate the London sell side liquidity twice, so it creates so-called double bottom right here. Perfect right there. And here's the screenshot that we take. So basically here's our write-up right there. So you have a London right there, the high and the low. The low is the sell side liquidity, is the buy side. So we see that it creates a fall breakout right here. It breaks that level, 52.30.50, and then it retests from above, and then it reversed. Huge reverse right there. And the target is perfect. Our target's London buy side, which is the high right there. Exactly like ICT give right there. The target is the London low or sell side liquidity, which is for the short setup. For long setup, going to be the buy side, versus buy side right there. So it's very accurate right there. So we lock that in, and we see that that is one of the model that we try to build into our playbook right there. our inventory right there. Yeah, we did took this trade. Let's take a look at the trade that we took for today. Yeah, for some reason we didn't recall the trade we took for today, so we do multitasking and we forgot to hit the recall button right there. But anyway, we saw the setup. We did try right here. We tricolor trade right here, and we get stopped out. And then when we saw the level, this setup formation, then we go long right there. That's the beautiful setup right there, which is ICT's model, but it fit in with our model, which is for breakout type 1 reversal, which is break, retest, or retap, or or tap from below right there and then reverse. Yep. And here's the interesting we observe for today. We see, wow, the 45 today is very interesting. This is the huge manipulation move, expansion, right? So after right here, you have a consolidation and also display into the ICT delivery, bright delivery there. Today we really understand that concept. Before that, we're not so clear, but now we can see clear now. Just take a look real quick at ICT price delivery model. I think we have some. Give us a second. We can pull out. Okay, right here. So basically, from the consolidation, everything starts consolidation. Then you have expansion, which is a manipulation right there. Then it can turn to reversal or retracement. So look right here. You have consolidation right here. Do we agree right here? 1, 2, 3, very consolidation right there. Same right here, consolidation right there. And this one is manipulation to rate the sell side, and then boom. When expansion and it's reverse. So right here, we have consolidation, and then you have expansion right there, and then reverse. Expansion is the manipulation mode right there. So it's rate expansion in order to rate the buy side, the sell side. Break the level right there. So this is the expansion right there, and then it reverse. Whole idea right here also. Now we have a trend, right? The trend is forming. Then this is a retracement. It's not a consolidation at all. And after retracement, it can go back to expansion, or it turn into a reversal. In this case, it turned into a expansion, another expansion, and then you have another retracement and another expansion. Remember, right here is expansion. Right here, it go into consolidation right there. And from the consolidation, we can see that it have a expansion, and then it turns to reversal. Right, so ICT say that it will never go from expansion into consolidation, but in this case we see that is a consolidation. Expansion go to retracement. Yeah, this is retracement. Then it goes to consolidation. Yes, so it's a retracement go into a consolidation. Yeah, a little bit right here, but we understand that after the consolidation, you're going to see the manipulation move, expansion, and then it reverse. That's the nature of price delivery right there.
The markets are open.
Okay, so you see the market open right there. You see that very quick. Wow, we kept that moment right there. So we want to see how it's played out. Yeah. So this is the key level right there. I want to see it gonna test it level. Basically, it gonna test it level right there. All right, here's another. We have 5 more minutes, so here's a model that we try to be right here. Basically, we see consolidation right here and expansion, and then another consolidation right here, and then expansion, and then it reverse right away. And it go back to London high right there. It go back. So that's another model that we all try to build into our playbook right there. And here's the model of drill breakout. So basically we have 3 steps right there. The tap or retest from above right there, and it break, right? It break it and then it reverse. That's the signature of a real breakout. Right? First it break first, and then it reverse, and then it break. Yep. Yeah, break first, reverse, and break. That is the second leg up right there. Yeah, I think we have to fix this, make it more sense. I think it's break first, like real breakout, break, and reverse, then boom, we're gonna break. I think we have that. In our playbook, where it's a trend continuation. You have break, you have reverse and break. So we have break. Actually right here is 50 on high time frame. Let's fix this one real quick. So basically we have break, break, reverse, reverse, and then break. This is also says second leg up right there. Break, reverse, then break, reverse, then break. So right here we can see that it's a double, double bottom right there. Yeah, we need to fix this. So basically you have to be first is break it first. Okay, so we can say right here, that's break it, and then it reverse, and then it break. Just pay attention to this 3-step. So first, right, it's real breakout. So we want to break first, and then we have a reverse. Sometimes a reverse happen right away. In this case, it happened right away, and it break again, and now it's another reversal right there. So in this case, we have 2 reversal, 1 and 2. So second is reverse, then it break again. So that's the real breakout right there. The second break is the real breakout. So it's a trend continuing right here. So we have a real breakout at 52.73.50, that right? 52. And it's a second or neck leg up, similar to neck leg down. First you break it, second you will see that it reverse, and then you see break it. So after it reverse right there, we put a buy stop at this level, no doubt. You see that, the buy stop right there. Yeah, real breakout. All right, let's save this to I think let's save it. I think it's real breakout right here. Version 2 more accurate. Yep, so that's what we have. So we have two setup, beautiful right here, reversal and a second leg up. That's just two trade. We can make a huge money. Right here, you see that? Wow. So it's gonna hit this level. Definitely the way right now. 7 minutes into this trade. Let's see. All right, thank you for your time and interest. We're always grateful for the opportunity. We do what we love, then success coming to our way. Thank you for now. Bye for now and have a great evening.